Hey guys, so this is the first episode of Wyckoff Wednesday, and we are going to get straight into it. I'm going to begin by talking about Richard D. Wyckoff, the man who created this, trading system. It's not really a complete system in itself, but it is very, very rigorous and specific in its definitions and in how it analyzes the movements of the market. So I'm just going to get right into it. Like I said, Richard D. Wyckoff, he created the Wyckoff trading method. It is named after him, obviously, and truly it is the kind of the birth of institutional trading, because this is how the markets are moved. There are other concepts that you need to understand, don't get me wrong, but at the end of the day, these concepts are what move the market. It really has to do with accumulating orders, distributing, and marking up and marking down price. And I mean, marking up and marking down price is just synonymous with, moving in one direction, aka trending, or another. So Richard Wyckoff, he was a stock trader and a market authority. He was the founder and one-time editor of the magazine of Wall Street and editor of Stock Market Technique. He is renowned because of the techniques that he found over 100 years ago. So these things are not new. This is very old, but it is still extremely applicable today because, guys, institutional order flow has moved the market for centuries, and it still does. That is why it works. It moves everything. That we do not move the market. People like us, not necessarily retail traders, but we are not hedge funds. We do not own banks. We don't move the markets. What he calls composite man moves the markets. He understood, sorry if this is a little hard to read, the background changed. The composite man, Richard recognized, moved the markets, and more importantly, manipulated the markets. He understood that the markets were manipulated because, with institutions trading, they get that retail traders are going to place orders at certain levels and do certain things and have certain psychological mishaps that they can take advantage of. And that is, like I said, the composite man. The composite man moves the market, and before these large movements that you see, you will see things that are called schematics: accumulation, distribution, and a couple others. They vary, and we will cover them within our course, but the schematics really happen before the explosive moves, and the explosive moves are the same as having a markup or markdown phase. So this is just a basic accumulation schematic. We're not going to get fancy yet. This is the first episode. Basically what you have is preliminary support, a selling climax, a secondary test, another secondary test, and you can have several secondary tests. So here we have 3, but what the important thing is that you get a spring that breaks structure, and then you continue. That's what this is saying. A creek is basically structure in the market that you break above and continue through. And then the opposite of accumulation is distribution. And in distribution, you have a movement where you have preliminary support, a selling climax, and then you get a rally and signs of weakness here, and then you sweep liquidity and continue down. And then we have a markdown phase, because in distribution, we go down in price. Accumulation, we go up, something that is evident by the pictures. So that's just a brief introduction. I will now get into a couple trades that we looked at this week. Let me make this full screen, or here we go. So I will make this easier to see. So this was actually, and I'll get rid of this. This isn't important. So here is a trade that we had on Bitcoin, something we were watching. This was a level of interest over here based off of smart money concepts. that is why we were looking at it. And then we had price reach the level that we were looking at, okay? And we were waiting for it to give us a schematic, which you can see really in here, if I can go farther. Okay, so this was a small schematic. It wasn't overwhelmingly clear on, you know, the 1 minute, 3 minute, and some of the, even the small time frames, but this was a schematic. You can see the general form. I'm not going to lay it out quite yet, just for time's sake, and the purpose of this video is to just get you all acquainted with it. So we had our schematic form at our level of interest, like we said, that was based off of smart money concepts. And then this was our point of interest after breaking this structure. That's not anything, you know, spectacular. You guys know what breaks of structure are. We retested and then came up, and we retested again, something that you will oftentimes note when you are trading schematics. It's observable that when you get points of interest from a schematic, they get retested several times, and price continued up from there. Unfortunately, we could not take this trade because of the broker situation that we had. Not favorable, but the important part is understanding the concepts of it. And then here was another point of interest that we had here, where another schematic formed on the smaller time frames, and we have moved up, but we are really just consolidating at the moment. So I will now go to the next pair that I'd like to look at. So we will look at GU. We did catch this. Looking back at GU, again, smaller time frame play. Typically, you'll see schematics on these smaller time frames. It doesn't necessarily have to be the smaller time frames, but that is how we trade. It's a style, and we will cover that in our course. We actually caught 2 entries on this. I don't have them overlapping just because I wanted it to look, you know, better for the video, because when you have these overlapping, it's hard to see. But this blue line was a point of interest from the left. So prior price action gave this as a level of interest for us. And we came into it and actually formed a schematic. So we came down into our level. We got the formation that we wanted to see. It's a little more clear on the 1 minute, but I'm not going to change it because I have to go back even more, and you can still see it here. So first entry was here, and then after this, we had yet another entry here, and we just took it up to a smart money base take profit. We took it up to inefficiency in the market. We could have taken it here, but we decided to take it really at this wick. So this was a 1 to 13, and this was a 1 to 16. Both of them hit within the day, pretty much just a linear move from the entry point. And this is what price loves to do, guys. Whenever you get into these levels of interest that we point out, I mean, look at that. You get massive reactions in the entries. Now, the beautiful thing is that the entries have extremely tight stop losses, or the trades rather. So the trades have extremely tight stop losses, and the entries are very, very precise. As you can see, both of these had minimal drawdown, practically no drawdown, and they both hit within the day perfectly. You know, they didn't wick to take profit. It just continued up, but that's not what we were looking for. This was a logical level. You could have targeted these equal highs, but that's besides the fact, guys. It was a beautiful trade, and it made sense from a smart money perspective with our level of interest, and then with what we were looking for. Yeah, so there were more confirmations that I'm not including. I'm not going to go into the labeling of the schematic because there are different forms. What we showed, it was just very basic, but they are like snowflakes. You're not going to see the same thing over and over. It's going to look different. You need to be able to recognize and pick up on what they mean and why price moves in certain manners at certain levels. So it's not just a cookie cutter, like this is what it's always going to look like. But in our course, we will show you, like, this didn't look like the example we showed, but we can go into why this worked and the different kind of schematic that it was. And then we can also break down the additional confirmations. We have an indicator that we use. that is really good at helping us find schematics. That was another confirmation. And then this level was also found, I mean, not in a typical manner. It's something else that we have implemented into our trading. We're really excited to share it all with you guys. But like I said, this is just a briefing showing you a couple trades. Now we'll go to the next trade. This was a very, very, very small time frame trade. So if I zoom in to price, I can show you all the entry. So we had a schematic form down here that we wanted to occur because we were at a level of interest. We were looking at a level, we were eyeing a level. I'm not going to mark it up. It should be obvious if you've been watching our videos. We had a schematic form. Sorry for taking a minute to get there. So we had a schematic form at a level of interest, and then we had our target right here at the blue line. You guys can clearly see that. I'm going to take that away just so we have less on the charts. So we had a schematic form down here. Again, different. It doesn't always look the same. Something we'll cover within our course. We'll show you why this is really a great schematic and why it did pan out. There was a lot of confirmations going into this, like the indicator, the type of schematic, the level, why we had that level, why we were targeting this region for take profit. And I mean, obviously we had relatively equal highs. Again, if you guys have been watching our videos, you know why we targeted that. So this is a 1 to 14. So, and all those happened within a day. So catching each of those was almost a 50% day. And it's, you know, granted it was XXX USD, but that doesn't matter. You had schematics form pretty much across the board on XXX USD at higher time frame levels of interest, which can really give you strong conviction that you are going to continue up. And then those things went hand in hand with this. So here, what we have, if it will load, I can try to exit this and then go back in. So here, what we had was a USD CHF trade. I'm going to try to talk as it gets pulled up. So here we go. With USD CHF, this is a particular labeling. It's just really practice. We're going to cover this because it goes hand in hand with just general USD weakness. So we had a higher time frame level of interest that we came into, and we started to distribute. So the prior examples were accumulation. And what we did is we started to distribute. We had a bunch of smaller distribution schematics within this big one. And then we actually came up to test a region that we were looking at. It was based off of a schematic, the region that we were looking to enter. So we entered the trade, and yeah, that is really, I mean, I don't want to say it's simple because it does take time to understand, but when you get the schematics and get the general idea of what we do, it can really confirm. And then this is, you know, just our general setup. It's really what we prefer. It met everything on our list, so we took the trade. And really, guys, that is everything for today. I don't think that I have anything else I want to talk about. I just wanted to cover some of the schematics that we had, and let you guys know that we're excited for our course, kind of brief you on what, you know, what they kind of look like, what we kind of want, but a lot of it is reserved for teaching because it has taken us a lot of time to really understand it, and we want to help you all out and be very, very thorough with it because it does have a lot of components, but it really is a beautiful system when everything comes together. So we're excited to drop the course. We will talk to you all soon, and yeah, have a great night, guys. We always appreciate you guys watching.